Do you own an S corporation? And if so, are you committing one of the biggest mistakes that we see S corporations make? If you own an S corporation, you are legally required to pay yourself reasonable compensation via W-2 payroll for any work that you do in or on the business. And I have so many S corporation owners that come to us and I ask, are you on reasonable compensation? And they say, no, I have no idea what that is. My prior accountant didn't talk to me about it. The individual or the firm that helped us set up this S corporation didn't say anything about that. And this is a huge issue with S corporations because it's a really, really easy red flag for the IRS to spot for an audit. And while they haven't done a lot of audits in the past on reasonable compensation because they were just understaffed, this is something that they're starting to ramp up on. So it's something that even if you haven't been audited in the past, it's very possible that you get audited in the future. So if you are an S corporation shareholder and you do work in or on the business, you need to be on payroll for reasonable compensation. We determine what reasonable compensation is via reasonable compensation studies. So we do a reasonable comp study at our firm, and we determine what shareholders should be paid. Based on that is what we determine the payroll for each shareholder. And it needs to run through actual payroll. There needs to be a W-2 tied to it. What happens if this doesn't occur? The IRS will get the S corporation tax return, which will issue a K-1 to each shareholder. And then when the IRS does not receive that W-2 from the Social Security Administration from that company for that shareholder, the IRS's computer system can easily see that that shareholder is not on payroll. It is a very easy way for the IRS to flag for an audit. At that point in time, the IRS can come in and do a reasonable comp audit. If you are found to have not paid the reasonable comp you're supposed to pay, the IRS can go in, reclassify earnings as wages, and then assess all sorts of penalties for back taxes, failure to file, and remit payroll taxes. Then you end up with penalties, interest on top of that, and it becomes a mess. It also includes state and local payroll taxes if that is applicable in your state, and unemployment. So it is a big mess. Make sure if you have an S corporation that you are getting paid reasonable comp through payroll. Hopefully that's helpful, and hopefully you are not waving that red audit flag to the IRS.